Hello, 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 everyone. Happy Friday. How's everyone doing? Light viewership today. Good morning, Tony. Good morning, Options 22. Future, if you trade futures contract roll, expiration is next Friday. So you're rolling anytime between yesterday's close and the next couple days. Generally, this is the Friday rollover. Very quiet news day, very quiet day. Watching for we got some buying pressure yesterday afternoon, or yesterday morning and afternoon at some key levels. So again, what else do we have today? Really nothing. Consumer credit change, used car prices. So nothing going on, and not much Monday again besides consumer inflation expectations. So far, the S&P little mixed with the mega caps. But Nvidia was trying to get a base. Apple bouncing back a bit, so we're gonna keep an eye on that. Energy still strong, but energy getting toppy up here. In the group, energy is leading industrials, comms, services. Fed Watch Tool. Remember, it's 12 days away from the next rate pause, and still is fully priced in a pause, and the pause through next March. Fear and greed still in neutral mode. We had DocuSign restoration hardware yesterday afternoon. Kroger, they see inflation easing a bit, but the consumers, they guided lower because of the pressure on the consumer still, even with inflation easing a bit. So that's where that sits with Kroger. That's about it for today. Again, very quiet. You can see the jump is due to the contract roll. So if you're doing the analysis, and I don't talk about this much, but if you're doing your analysis and you've rolled, you have to consider your cost basis, but then you're going to want to come to, once you roll into the D's, you're going to want to set up your levels on the contract you're now trading. So you can they jumped about 40 points. So also why I'm showing this is because yesterday, now since we're in the D's and we have the gap, technically, if you're not back adjusting your charts, you're going to be watching, because I'm watching for a close above yesterday's high. So on rolling to the D's contract, I'd be watching the D's contract from yesterday, the December contract from yesterday, and that's hot, that high, not looking at a continuous contract and saying, oh, now we could go here, hit the back adjust. I don't like the way they fully back adjust. They just adjust it repeatedly and it starts screwing stuff up longer term. So I just look at the contract and do it that way. But I will be watching it to see where we close on the unadjusted contract above yesterday's high. So above yesterday's high, since this is going to now show not the September, I'm not going to be watching September's high. Just keep that in mind. Hey, PMG. So that's where we sit right now. What else do I want to talk about? No, that's about it today. Let me just go, since we are getting the bigger gaps due to interest rates and everything else. I hate rollover days during the trading week. Well, I mean, you can roll over whenever you want. A lot of people roll over Friday at the close or Sunday night open, because, again, it's just frustrating when you're in the middle of a pattern. And we have a couple things. We have a potential percent B buy. Now, that could also be viewed, hey, if it closes above here, watch Sunday night futures open. Watching for cycles bottoms. I was just going over some stuff because some people get confused of why. Well, there's a big gap, but I'm not seeing it on the December. Well, that's because it's the way it's done and on the charting platform. So, really, if we want to do some quick analysis, yesterday, here's what I'm talking about with the buying pressure. You can see, and this was a little mini double on the 15-minute. So we're just going to do our analysis right here. You can see it hit this, and that's what I was watching yesterday. Using the conservative targets, and the first and second targets have been hit. The final target 45.10. If it keeps going above there, these are just, I'm just doing some quick little analysis just on this contract today. 45.10 to 45.11, and then 45.14. The key support coming in about 4,500. And again, that's the December contract. So that's what I'm watching here. If we start break, you can see there's been a fair amount of buying pressure. Anytime between about 44, just under 4,500, and even down to 44.85. So that's where I'm watching for a more solid base to form, with potentially cycles getting to the bottom and rolling up next week. So we're going to have to see. Now, the double is still in play. Double is still in play unless we're to close today on the December contract below 44.72.75. So that's where it's going. Good morning, Jacob. So NASDAQ, let me just go to NQ, the Dec Contract of NQ. There we go. So same thing. We have a potential percent B buy above Friday's high, but that's a fair a ways away unless this really starts to get some traction. That's at 15,590. You can see we have still the double in play on the Dec contract, and from a stop perspective, this is a long way off. Would need to close below 15,098.25. Because we haven't hit the trail. If you were doing an early trail, it would be 15,191.25. So those are your two levels. What am I watching for today? There was no double yesterday. There was this was just a mess down here. There's a little double this morning on the 15-minute. So you know, there's your little. It's already hit the first target, 15,483. Let me double check something. 15,483, 15,493.75, 15,503 are the key levels going off the open. So if you're in bullish mode and this holds, especially on a pullback to about 15,460, that's the upward short upward bias. Short term, not short term upward bias. So I'll be keeping an eye on that. A rally, besides using those little mini targets, the next key level is 15,590, and then 15,640. Where else do we strolling with the news? Meta, and maybe take a look at MCD, larger time frame double. Dow, you can do the same analysis on this. I'm not going to go through this today. I'm mainly watching the S&P and NASDAQ. Russell, the contract roll date, if you're wondering, is not till technically next Wednesday. So that's why you don't see a gap in here holding that 200 support. So I'll be keeping an eye on that. The VIX dropping, looking at close, was at 1480 with the close yesterday after that pretty big, or the open, sorry, the close yesterday was after the rejection of there, was down to 1440. You know, unless it starts getting above 1480 again, not real. I'm more interested in looking for a bottoming pattern unless we start really spiking above that. Again, from a cycle perspective, we should be getting to the bottoming area. Does not have to happen today, but could be setting up a bottom through Sunday night, Monday morning. So I'm just being aware of that. The DAX, just a choppy mess trying to hold the 200. If we lose the 200, it will get interesting in the DAX. So keep your eye on this 200 area, about 15,556. The notes, it's really not much going in here. I'm just going to be watching a little to see if we get the pullback to about 109.20, 122 area intraday. That's all that's going on there. Today with the contract rolls, it's just going to be interesting. So yield, not much going on there. Let's see. This is a day that, Just one of those days. It's still bear steepening. Still watching the minus 59 basis points dollar index. Got some downward pressure earlier and now the bounce up. But remember, cycles are at the top. This is also why I will be watching dollar. If we get a rollover or some sideways slight pullback action, we should get some pressure relief off of the futures, off the financial futures, so the S&P and NASDAQ, which is why I'm watching for them to bottom and the dollar to top in the short term. The dollar to top in the short term. And this is sort of just a mess right in here. If you're trying to watch this for a double, you know, you can, it's just a very sloppy one, but that's sort of just a mini, and that would just be the pullback to the daily rotation zone. So that's really about it. Crude basing sideways, letting the rotation zone catch up. So this will be interesting to see if we get the continued breakout, even with cycles rolling over. So remember, so far this is a sideways pullback with cycles rolling over. Now the support level I'm watching on the shorter term basis is right around 84.40, and on the real short term about 85.80. Other than that, still watching for some potential downwards, but giving this a little more room from my perspective too, because cycles are pulling back. I personally would not be crowding a stop in here unless we really start breaking below 84.40. Natty gas still holding the key support level and a little pop up there. Gold, not much to talk about. Let's see what gold's setting up for next week. Let's see. Silver. Hey, Richard, watch the podcast. It's going to drop on Monday morning for the big picture. We go through a lot of big picture stuff, and that's covered in the podcast. Is coming out Monday morning, so you'll get all the sort of the big picture things. What did Oh, well, that's good. No central bank digital currency yet. So where else do we sit? Again, sometimes there's just boring days. The JGBs, not much changing, still holding at this, minus 65. The yen pull back into daily rotation zone to the key support area and rotating up. Still the target's 148.85. Nothing's changed with that. Euro, nothing's really changed with this. On any pop, I will be watching for the next rollover play. The pound getting closer to that 200 area and a very key support area. So I'm going to be watching for a bounce and then another rollover play in this. Bitcoin still holding the 25.7. 24.750 is still the key breakdown level. Spiders and Qs, which of course there will be no real gap on. I mean, yesterday's close 444.85, 444.88. So we don't have to do anything different with this. That's the one time I like the spiders and the Qs better, when you don't have to worry about the rolls. Holding the 50 exponential and the 50% harmonic. This 443.34. Support coming in at yesterday's close, 444.85. We're trading 445.06. So if there's a little pullback, we'll be watching there. Again, would be a percent B buy on a break above today's high with a follow-through close. So if you're looking for more of the midterm play and possibly taking out the final target on to the upside in the spiders, if there's an intraday buy pattern that you had and then it continues and follows through on the close, that could be rolled forward to a bigger pattern because we do have a percent B buy. Other than that, what are the next levels? To the upside, 446.22, and then roughly about 448 to 448.40. To the downside, the key thing you're watching for is 440.76, both for major support and on the closing basis. If you close below there, that invalidates the last target on the double. The Qs. The Qs. 372.06 yesterday's close, 372.07 the open, so you're pretty much opening where you're closing. Next key level to the upside again. The Qs also have the potential percent beat buy on a break above yesterday's high, 372.85, and then with a follow through close. So that's where that sits. The next target to the upside, the next major target would be 374.74, and then roughly right around 376.30 area to about 376.80. The key support right now is 367.77 if we do break below yesterday's low. Before that, I've been looking at yesterday's open right around 370.20 to yesterday's lows 369.15. Tesla still can't really break below this 244, 245 area. Looking for a slight gap up, but again, anywhere between the 255, 256, and 267, watching for rollover plays unless we close above 266.69. So not much has changed there. NVIDIA, after the gap down reversal yesterday, still the key level is the 448.88 to watch for. This would be with cycles getting to bottom, a aggressive percent beat buy above Thursday's high with the closing price today for a bounce trade only. All right, you wanted me to look at Meta. Again, very volatile yesterday when we have the conflicting patterns in play. So, and you're seeing that big tug of war yesterday. So, but nothing's really changed. You have the two conflicting patterns. So, that's where that sits. What else did you want? What else did I miss? What else? MCD. Mickey D's. Larger time frame double. Larger time frame double. Oh, your double top. That's the one you're talking about. Your double top. The double top in Mickey D's. Targets 270, 57, 265, 86, 261, 14, all valid. This is the move that started it, that started the creation of the double. The double has been confirmed. Again, this is a weekly pattern. It's been confirmed by the last 2 weeks of trading. You need to close below this low of 280 this week to trigger it. So that's where that stands. And on any bounce play, if this does trigger, I'd be watching for rollover plays on the daily and rollovers and then break back below the 200. So that is a completely valid double. Where else do we sit? Chewy. Would I start looking for the pattern here at all-time lows? Well, look at the P to E ratio, and they're not in growth mode anymore. No. Anything here would just be a trade only if it's going to hold key support. I mean, if you look here, this is not something with a PE ratio and not in growth mode anymore that I'd want to sit on. This could really unwind. So if you were looking for any plays, again, it is a long-term support. It would only be a technical bounce. For example, let's say this double were to trigger. And they beat earnings, but look at this. Their revenue's not in super growth mode. So if you're going to play something, this would be a bounce mode only. And if you take a look at that bigger picture, look. Bounce mode, weekly rotation zone, I'd be watching for the next bigger rollover play. I would not be looking to sit on this in a portfolio at this point. From my perspective. Do whatever you will with that information, but this is not something I want to sit there and pack away because this could easily be cut in half again. So this could easily be in the next 6 months trading at $10. which would still, unless something really changes with their business, would still be potentially overvalued. Amazon, which, let's go through this, did not close below 62.5 and did not trade below the 72. I mean the 75, 72. So the double is still in play. That's why you watch those levels. That's why this is, see, with the gap down, and you might be, oh, well, maybe I should just exit. Well, it didn't. That's why there's a walk away level, which means if it had traded below 132.93, you have your stop in there. It's out. It's out. It's out. It's on an intraday basis, but on a closing basis, it's 134.10, and it did not close below 134.10. Obviously, it bounced up very strongly, which is why I utilized the key 2 stop levels. So the double is still in play. It's still valid after the stop reduction. So nothing else to talk about there. All right, that's pretty much it. That is pretty much it. Just glancing at this real quick. I mean, you can still do, even on the roll contract, you can do your little analysis from here. On the roll, again, first and second targets hit. 45.10 is the next target, and then I'd be watching for the key area about 45.15 on any strength into the open. We could still see a fair amount of back and forth trading today, especially with the contract rolls for the big boys and cycles trying to get to the bottom and build a more solid base. So we should have some better insight Sunday night, Monday morning onto how we could be playing out with a bounce going into next week, especially if we get some little pullback and a little weakening of the dollar. Until then, I hope everyone has a wonderful weekend. And hey, Alan. Good morning. Yeah, this one, if you're newer, this is also one you might want to watch just because I talk about contract rolls and everything else. So just watch the replay. It's sort of a quiet morning going into everything. So when you can, watch the replay. And thank you for tuning in. Really appreciate everyone's continued support on the channel. And I shall see everybody on Monday morning. Bye for now.